Happy Friday, everyone. It's Alyssa Corman, Ed Carson here with a look at the stock market today and this week, plus a battle plan for your week ahead. We are going to talk about the technical action for the major indexes this week and talk about a couple of stocks. Ed, we've got ASML, Google, and Apple, all worthy of discussion for various reasons. But kick us off here, Ed. Let's take a look at Thinkorswim from TD Ameritrade, showing the NASDAQ composite with those regression channel lines, which are not containing the NASDAQ's move at all at this point.
Yeah, it's just sort of off the radar in that last couple of weeks. It hit resistance over here a few weeks ago, and you can see we're still sort of in this downtrend. Came sharply through the 50-day line on Monday, kept on falling through Wednesday. At that point, we'll look at the other indexes. Things were getting pretty dire, even on the other major indexes. Nice bounce these last couple of days, but certainly on the NASDAQ, we're still below the 50-day line. So the market rally, which has been under pressure the last couple of days, we're going to keep it there. It's definitely been this split market action, and the NASDAQ has been on the worst part of that.
Most definitely. The NASDAQ did gain, though, however, 2.3% on Friday. The Russell 2000 up 2.4%. But small caps and the NASDAQ composite here in the weakest looking positions. We had the S&P up 1.5%, the Dow up 1.1% on Friday. Those looking a little bit better. And as you said, we'll get to those. But we could take a look at the NASDAQ for the week. So even with the strong move that we saw on Friday, still down about 2.4% or so for the week. And so now these weekly losses are piling up.
Yeah, it's the third straight one. It was nice that we did close in the upper half of its range. You can definitely see with this candlestick, pretty high up. So maybe we'll look back and say this was a support week, but that's looking back. We don't know. Right now we're on the third straight, sort of another losing week. A lot of breakouts struggled this week, and not just in the tech sector. There was a lot of churn. It was not looking good. Housing stocks, the miners had trouble. So there was definite weakness, and it's just a choppy market, and it's especially bad when it's like this. But markets that are like this are really difficult because they're just enough to lure you in, and then you buy near the top and then get shaken out. So it hasn't been an easy market to deal with.
Yeah, oil and gas too, another group that we saw a number of breakouts earlier in the week and just some pretty volatile action as the week wore on. So let's look at the NASDAQ. Now we want to take a look at the S&P 500 over on MarketSmith to see that action for the week. So a strong gain on Friday as well as Thursday, coming down to the 50-day line. Really good to see support at that very key level.
Yeah, it was really nice to see that, and back above the 21-day line that had lost earlier in the week. Yeah, this was not positive. This is why it was like we're sort of on the edge. We really needed to see a bounce on Thursday, and we got it. Friday's gain was on really light volume, so that's sort of saw the volume really pick up on these days, and then we saw it drift off, which isn't the best, but the price action was positive, and so that's good to see.
Yes, and the Dow, similar scenario, really coming down hard to its 50-day line, but bouncing off that level and now back above the 21-day line as well as the 10-day moving average.
If it were just the Dow and S&P, we wouldn't be talking about market under pressure. Would have said, well, Wednesday would have been like, hey, that isn't so good, but we're really close to all-time highs. But still, so it's pretty awfully close to all-time highs. It's just still a split market between different sectors, and ongoing sector rotation adds to the difficulty for investors.
That's right. But as you said, found support where we needed it to. It would have been maybe extra nice to see support at the 21-day instead of the 50-day. We were tested in the middle of the week, coming down below the 21-day for the S&P and Dow, but we'll take it. And we also, of course, want to check in on small caps by looking at IWM. A strong move on Friday, but it is below its 50-day line. So not in a position of strength right now. Maybe we'll see it get back above that level next week. That would be nice.
Yeah, and again, we saw a little bit of that in much of April, where you saw the NASDAQ and Russell to sort of try to come back up, but in the later stages, but that didn't last long. And so that's always going to be tricky. If it gets back above the 50 or these stocks move back above, do you buy then or do you wait for real strength? And it's like either way, there's some pros and cons in such a choppy market.
Yeah, which we will talk about in our game plan for the week. But let's take a look at some individual names. ASML, the chip sector was looking so strong that we saw a lot of chip stocks pulling back over the last couple of weeks. But ASML, it seems like, was one of the stronger ones. Although it did dip below its 50-day line midweek, it held up much better than most in this sector and a nice rebound at a pretty compelling area.
Yeah, a nice action because it didn't fall too much below the 50-day line. A lot of others did fall significantly below. And this one got right back above the 50-day line. As you say, came back up. This one, you can look, the higher volume was nice. All these things. So you could argue it was buyable. These couple of days bouncing off the 10-week line, sort of a trend line that you could say is sort of in there. You can see it sort of tried to do that a week or so ago, and that didn't last. So this was positive. It'd be really nice to see if the chip gear sector could come back. This is also relatively positive. The RS line isn't too far off highs, so that's something to be looking for. I really think in this kind of market, you want to be looking for stocks with a relative strength line that is at or near highs, because those are the stocks that are truly the leading the market. Those are the ones that RS line measures a stock's performance versus the S&P 500. So you want to find the ones that are leading the market.
Exactly. And of course, this does get a little tricky with most early entries, whether it's a pullback or looking at a trend line, because in most cases, that RS line isn't going to be at highs. But if you can just extrapolate the action, if it were to continue to move higher with the relative strength line where it is now, if it were to move to new highs, you might see that RS line at new highs at that point as well. But the action here with ASML strong enough to give it a spot on both swing trader and leaderboard today. So I think that says something as well.
That's absolutely right.
And we want to move on and take a look at a big cap tech stock that has also graced the pages, I guess you could say, of swing trader and leaderboard here. They're still on leaderboard, but bouncing off of its 50-day this week. So really good to see this big cap tech leader continuing to hold support.
Yeah, it was not looking good. Just like so many other things, the volume was getting pretty heavy on Wednesday. It wasn't the biggest volume on the way back, but really was nice to see it. It never got back to the buy point, so it found support just where you'd like it to. It's rebounded from there. The RS line, doing relatively well. It's pretty close to highs. It's pulled back some, but that's not so bad. Again, just like ASML, they had a prior uptrend as well. ASML was a little stronger, but it's not far from highs. As you say, you could extrapolate. If it continues to outperform, it could go in there. So it was actionable from the 50-day line or a 10-week line. It's really not too far off of that. And so, fairly nice action here.
So a bright spot, both ASML and Google, because by and large, technology and growth in this bifurcated markets have not really been favorable areas to be in. So interesting that these are showing strength.
Yeah, it is interesting. It's also what's weird is it's like, because you want to say, well, why not show some of the miners? Well, the miners actually had a tough week, and some of them had struggles. I mean, some looks just fine, but there's a lot of rotation back and forth. You just have to keep on staying flexible and paying attention to what's working.
Yeah, a choppy market underneath the surface, even with the S&P and Dow taking a step back, looking fine, getting support where they needed to. But let's contrast Google with Apple, because Apple is in a very different situation right now. Even though it's back above its 50-day line, look at that relative strength line. At least Apple got support at the 200-day, but this isn't the kind of action that we would be looking to as, yes, Apple is in a position of strength and actionable at these levels.
Yeah, I mean, it doesn't mean that a stock with a low RS line can't work, but you just, the odds are much more in your favor to find the true leaders in there. And if you were just looking at the very recent price and volume, you might say, hey, look, here's an early entry. It found support at the 200-day. It's breaking the 50-day. Look, it's breaking this handle or breaking this downtrend. Why can't I buy this like I'm buying ASML? Well, because of that RS line, as you said, it's like this is really the lowest since, going all the way back to here. It hasn't made any progress. So, this is why this is why you don't want to be stepping in a stock like this. Now, could it come back? Sure, it could definitely come back, but the lack, it's just been lagging quite a bit, especially from here when it first tried to move out. But since this point, it's really been struggling. And there's just a lot of other opportunities. Why go for one that seems to be on, lagging the market rather than leading?
Exactly. And we focus on that relative strength line a whole lot for very good reason. Looking at history as well as group strength, which is another factor to consider in your analysis as well. So Ed, with all that considered, still bright spots in the market. NASDAQ and Russell not looking too great, but the S&P and Dow continue to look pretty good. It was, don't get me wrong, it was pretty concerning there midweek. But by and large, we're doing okay. But I think that still this bifurcated market remains a huge question and concern, really, for investors. And even in leading groups, like you said, miners, that's been a leading group, but there's still this choppy market that's been making it very tough for active investors.
Yeah, and it's not necessarily an easy way around it. I mean, it's just like, I think investors should just remain cautious. I mean, you should probably size your positions relatively small and maybe try to do some early entries at times, because I mean, one of the issues is that with the market and with the stock, generally the idea is that you try to get a stock that already has a little momentum, like it's built the right side of a base, say, and then it's breaking out, because that momentum, it's like, there's a whole bunch of reasons why, then it's like, okay, it's proven itself and it's really going. But in a choppy market, you have this very short-lived time. So, that's just really difficult. And in any case, if you only have like a 10-day or 4-week period to make money in, and it's not really rip roaring, it's hard to make money even if you do it perfectly in many ways. So just be cautious. Just know that you're probably not going to make a lot of money in this market. But you could lose a lot. You might end up buying right at the top and selling at the low. So, I think just staying cautious, when you look for screens, look for those high RS line stocks, things along those lines, to try to make sure that, to put the odds as much in your favor, but it's not 2020 anymore.
Exactly. So if you are tempted by technology stocks, I mean, you need to be, I think, extremely critical with those charts and maybe not buy them in the same kinds of ways that maybe you could get away with doing in 2020, coming up through the 50 or clearing a very aggressively drawn trend line, because that's not what's been working in this market for the most part.
Yeah, I mean, and I would definitely encourage people to have a diversity in the sectors, because they keep on rotating around. There's just a lot of things, and don't get pigeonholed in it. I would still say that the more highly valued growth is one area that just is just a no-go area. I mean, I'm not saying it won't bounce, but it had a really bad week despite Friday's bounce in many of these stocks, and they just aren't looking good. The story stocks, they'll have their time again, but there's a lot of sectors that are working or have worked. This one just hasn't for several weeks.
All right. Well, we are going to keep our focus on those relative strength lines, industry group strength as well, those proper setups, really being selective and cautious as well, not getting too aggressive, and making sure even if you do get presented with the perfect setup, that you're not letting the losses get out of hand if that stock happens to then get dragged down with a midweek pullback like we saw this week. So we're going to be staying alert and looking for new setups as they present themselves. But that's it for this week. Thanks for tuning in, everyone. We hope you have a great weekend, and we'll see you back Monday morning for another episode of IBD Live. We'll see you then.